In today's show, I'll be breaking down the latest technical analysis as well as a potential black swan event. We'll also be discussing the Bitcoin supply to run out literally on the exchanges in 9 months. According to Bybit, can you say supply shock? We'll also be discussing BlackRock's Bitcoin ETF is the only fund with inflows since Friday. I'll be breaking down the latest Bitcoin ETF data, as well as Peter Schiff questions Bitcoin ETF demand, as well as the $100,000 Bitcoin price target. I'll be breaking this down for you, as well as the latest out of Hong Kong with their Ether and Bitcoin ETFs. According to the top analyst, Eric Balchunas, they'll be lucky to get 500 million. Also breaking news, Iraq to start mining Bitcoin on a nation state level alongside the UAE and 5 other nations. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show. But anyways, fam, if you're new to the channel, important to smash that subscribe button to receive daily premium crypto news alerts every day, just like this. Also, hit that thumbs up button. It's free to do so, and it helps out supporting the show, getting more eyeballs to the stream. It's always greatly appreciated. Today is pod episode number 1611. That's right, April 16th, 2024. Having only 3 to 4 days out. Will having 2024 land on Friday or sat stack and Saturday on 420? Let me know your thoughts. Let's kick it off with our market watch, as we do each and every day. We got Bitcoin down almost 5% on the daily at the time of the live stream, hovering above 62,100. Let's see if that critical 60,000 support holds up. We also have Ether correcting 5%, trading just above 3,000 as all the major alts are correcting and in the red. And the alts, can you say? Rex City. And checking out coinmarketcap.com, we're sitting at a 2.29 trillion market cap with about 118 billion in volume for the past 24 hours. Bitcoin dominance 54.1%, with the Ether dominance 16.2%. My question for y'all, how high do you feel the Bitcoin dom will climb for this particular cycle? Holla. And checking out the top 100 crypto gainers for the past 24 hours, we got Celestia, OKB, and Tether, because virtually everything is correcting and in the red. Not a good sign when the top gainer is a stable coin. Just saying, family. And below that, more stable coins, USDC and DAI. So yeah, not a good look right now in the market. And checking out the crypto bubbles to get more of a visual perspective, you can see the alts getting slaughtered right now. And zooming out on the monthly, not a good month either for roughly 90 to 95% of these alts. And checking out the crypto greed and fear index, we're currently rated a 65 greed, yesterday 74, last week an 80, and last month a 79 in extreme greed. And checking out the Bitcoin halving countdown, according to this countdown calendar, we have 3 days and 9 hours left until Bitcoin halving 2024, currently scheduled to take place very early AM on 420. That's right, sat stack and Saturday, and that's going to occur at block height 840,000. We're currently at block height 839,493, only 507 blocks away from the most significant event that only occurs in crypto every 4 years. And did I say it's going up forever, Laura? So yeah, it's already about to go down. So anyways, fam, let me know where you feel the Bitcoin price is likely to take us leading into the halving later this week. Holla at your boy. But anyways, let's dive into today's Bitcoin TA. Check out the charts and where the price action likely to take us next. Bitcoin faces new lower Bitcoin price targets after dropping up to 15% since the weekend. Analysts are lining up to consider where the market might bottom. So let's discuss it. After challenging 61,000, a significant rebound failed to hold for Bitcoin, which is now sitting at 62,000 at the time of the recording. And according to Mark Cullen, the course is set for a fresh attack on 60,000 resistance. Using the Elliott wave method, he suggests a final move down could come imminently, taking Bitcoin to around the 59,000 mark. Quoting him here, still very possible that there is one more leg down for Bitcoin to complete the wave C of the larger flat corrective formation. He also says should complete today if it is going to play out. So let's see if 60,000 holds, family. The 59,000 level would put the Bitcoin price action at its lowest since late February and represents a large drawdown versus the recent all-time high of 20%. And continuing, others, including Matthew Hyland, look to the upcoming weekly close for insights into the nature of the current pullbacks, staying power, as he uploaded this chart and shared the following. This is highly dependent on how the weekly candle closes. The last time it tested it was a great buying opportunity and never closed below it. The close will be what matters most. So a very important weekly close here. Full candles below the 10-week simple moving average last occurred mid-2023, according to TradingView. Now, according to Bing Dang, a contributor to on-chain analytics platform CryptoQuant, the longer time frames could yield frustrating conditions for the Bitcoin bulls. Analyzing his adjustment cumulative value days destroyed, which is the CVDD metric, he predicted Bitcoin can stay lower for longer before re-challenging its highs. That's right. CVDD measures the number of days a coin has been in its wallet when it moves on chain and multiplies this by the current price. Quoting him here, my adjusted CVDD metric recognized the local tops very well. And now I'm looking forward to Bitcoin backing to test and accumulate at phase 2, which is the orange line in this chart. And while history shows that deeper correction can occur, he added that he did not expect the current geopolitical impetus for the down move to reach the levels of panic seen, for example, during COVID-19 back in March of 2020. Now, a trip to the chart's phase 1 line is just under the 40,000 level now, constituting the worst case. Now, personally, I don't see that happening, but I respect the analyst's take here, as anything can happen in crypto. Welcome to crypto family. But anyways, let me know your thoughts on some of that sentiment and how high do you think we're likely to climb, and or how low here this month of April and for the weekly close post halving, which more than likely the halving is going to be this Friday or Saturday. So let's go. But anyways, fam, next story of the day, let's discuss the supply shock, which we can see in the next 9 months, according to the Bybit exchange, as the Bitcoin supply is running dry on the exchanges. That's right. Bitcoin supply on crypto exchanges will dry up in 9 more months, thanks to the 50% supply issuance reduction of this week's upcoming Bitcoin halving. Provided that the inflows from the US Bitcoin ETFs continue, Bitcoin's post-halving supply dynamic will see exchange reserves run out of Bitcoin, according to an April 15th report by the exchange Bybit. Quoting them here, Bitcoin reserves and all centralized exchanges have been depleting faster, with only 2 million Bitcoins left. If we assume a daily inflow of 500 million to the Bitcoin spot ETFs, the equivalent of around 7,100 Bitcoins will leave exchange reserves daily, suggesting it will only take 9 months to consume all of the remaining reserves. And that doesn't take into account the retail, that doesn't take into account nation state adoption, sovereign wealth fund adoption, all the other things. This is just based on ETF inflows currently, which is mind-boggling, because we also have ETFs about to be launched in Hong Kong. They already got the green light, as we discussed on yesterday's pod. Now, Bitcoin reserves on centralized exchanges fell to near 3-year lows of 1.94 million Bitcoin as of today, April 16th, according to CryptoQuant. So here's the latest data. There's only 1.94 million Bitcoin currently available on all the crypto exchanges. Let that sink in. The report comes amid a wider market slump, which saw Bitcoin fall 10% during the past week to 60, now 1,000-ish as of today. Bybit, the world's third largest exchange, oh wow, I didn't realize they were so large, expects Bitcoin prices to start recovering from the current correction, according to the report. Quoting them again, with this in mind, it is unsurprising that the Bitcoin price may continue to climb before the halving or even afterward, as the supply squeeze propels the price to another new record. There you go. Now, meanwhile, institutional interest in Bitcoin is on the rise. Weekly inflows into the spot Bitcoin ETFs have been slowing down since March. Last week saw over almost 200 million worth of net inflows into the ETFs, down from 2.58 billion in the week beginning March 11th, according to Dune Analytics. And despite the recent slump, the Bitcoin ETFs amassed over 841,000 biddies, worth 53 billion, with over 12.7 billion net flows since launch. Now, Bitcoin investor allocation has risen since last September. Institutions are allocating an average of 40% of total assets to Bitcoin, while retail investors average Bitcoin allocation of 24%, according to Bybit's asset allocation report. Now, Bybit noted that both crypto-native firms and traditional institutions are getting increasing exposure to Bitcoin via the ETFs or proxy stocks, such as MicroStrategy. The exchange expects more institutions to follow suit. Quoting the report again, we believe that not all institutions have been able to gain exposure since the approval of the Bitcoin spot ETFs in January 2024, as their investment mandates restrict them from investing in new products that have been in the market for only a few months. So there's a lot more institutional FOMO to come, is what they're ultimately saying. But I want to know your thoughts. Do you think the Bitcoin supply in the exchanges run dry potentially sometime this year or within the next 9 months, according to the analyst report? Holla. But let's dive into the next story of the day, discuss the latest more detail with the BlackRock Bitcoin ETF, the only fund with inflows since Friday, which is interesting. BlackRock's Bitcoin ETF has been the only U.S. spot Bitcoin fund to see inflows over the past couple of days, with all the other ETFs posting zero inflows or even lower. The IBIT Bitcoin Trust posted net inflows of 73 mil on April 15th, down 111 million from the prior day. The 8 other ETFs, bar Grayscales, posted zero flows over the past 2 days, according to Farside data. IBIT's inflows weren't enough to outpace the outflows from GBTC. It saw 110 million in outflows April 15th, slowing from April 14th's 166 million. Now, all 10 spot Bitcoin ETFs saw net outflows across April 14th and the 15th of 55 million and 36 million, respectively, as outlined here in the chart. Now, also, the recent outflows for the U.S. Bitcoin ETFs follow a roller coaster weekend for Bitcoin, as we pointed out. Meanwhile, global Bitcoin investment products saw outflows of 110 million for the week ending April 12th, with CoinShares research head James Butterfield said highlights the hesitancy amongst investors. Butterfield reported all combined crypto investment products saw net outflows of 126 million last week, and week-on-week volumes perked from $17 billion to $21 billion. Meanwhile, Iran's April 13th attack on Israel sent Bitcoin into a free fall, hitting a 3-week low currently of 61,900. But we do know we have a Bitcoin halving scheduled to take place sometime this week at block height 840,000. I'm praying for it to happen on Saturday, Stack and Saturday, just because it's 420. I feel that'd be pretty lit, pun intended. You already know, fam. Let's dive into our next story of the day. Let's discuss the $100,000 target from Peter Schiffy. This is actually interesting. Gold proponent Peter Schiff, everyone's favorite Bitcoin troll, questioned market pundits who have a set Bitcoin price target of 100,000 in the current bull run. Schiffy also took a dig at the spot Bitcoin ETFs and the demand created by the products for the current market. Schiffy is a known Bitcoin critic and often questions its market value in real-world use cases. Schiff called out analysts who claim the Bitcoin price could surpass $100,000 per coin, boosted by a significant demand created by spot Bitcoin ETFs. In the April 16th post, Schiff cited the bearish performance of some of the key Bitcoin-related equity markets, such as Coinbase, MicroStrategy, Galaxy Digital, and a few other crypto-linked stocks. He questioned why the high demand for Bitcoin is not reflected in the stocks of companies linked to BTC, quoting Peter Schiffy right here. If Bitcoin ETFs are really going to send Bitcoin to 100,000 or higher, why are all the Bitcoin-related equities in the bear markets? For example, Coinbase down 21%, Galaxy down 26%, MicroStrategy down 33%, WGMI down 41%, Marathon Digital down 55%, BitF down 56%, and Hive down 61%. Schiff said Coinbase is, so what I just reiterated. However, the gold proponent didn't specify a timeline for those losses, despite most Bitcoin and crypto-linked stocks outperforming traditional market stocks by a significant margin since the start of 2024. Also like to point out, he was recently interviewed, Peter Schiff, by Patrick Bet-David on his podcast, and he was asked, what kind of exposure to gold do you have? And he shared something I found pretty alarming. He said he has more than 50% of his portfolio in foreign gold-related stocks. So not stocks out of the United States. And that to me is a little strange, but nonetheless, only in the past week have many of these stocks recorded a downturn due to the bearish momentum in the crypto market, as outlined right here. The current bearish momentum in the crypto market is no big surprise either. Market analysts have explained, which we cover often here, how Bitcoin has historically seen a pre-halving dip and picks up momentum post-halving. The Bitcoin halving, as we know, is scheduled for later this week. Schiff didn't go unnoticed. His dig with several Bitcoin proponents responding to his post, debunking his selective data. One user pointed out MicroStrategy stocks are up 300% year on year. Let's not forget, Peter Schiff likes to fudge the numbers to make him look impressive alongside gold, but we all know the truth. A few others called him out for his cherry picking data, precisely what I just mentioned, while sharing the performance of Bitcoin alongside gold to highlight the growth difference between the two assets. While gold has risen to new all-time highs in the second quarter of this year, it pales in comparison to Bitcoin's rise over the same period. Bitcoin proponents Dan Held and Willy Woo also reminded Peter Schiff how he missed the opportunity to buy Bitcoin in 2013 when it was trading at around $1,000. So Schiff just seems like an eternal sore loser, in my opinion. But what are your thoughts? Shout out to Peter Schiff. He actually lives out here in Puerto Rico as well. But let's dive into our next story of the day. Here's the latest with the Hong Kong ETFs, which officially got the green light yesterday, as we shared in the podcast. Here's the latest updates. 3 recently approved spot Bitcoin and Ethereum ETFs in Hong Kong may not be as big of a deal as some may think, according to senior Bloomberg ETF analyst Eric Balchunas. April 15th, the SFC issued conditional approvals to 3 offshore Chinese asset managers to begin issuing spot and Ether ETFs. Bitcoin, that is. Bitcoin and Ether both got the approval. So, yes, this includes Harvest Fund Management, Bozera Asset Management, and China Asset Management. However, do note Balchunas shot down lofty predictions that the ETFs could generate $25 billion worth of inflows and pointed to 4 main reasons why crypto investors should temper their expectations for the recently approved products. Quoting him here, don't expect a lot of flows. I saw one estimate of 25 billion. That's insane. We think they'll be lucky to get 500 million, which is a $500 million. Whoa. So he's expecting 50 times less volume than anticipated. Now, justifying his predictions, he explained the Hong Kong ETF market is tiny when compared to countries like the US, adding that these ETFs don't allow Chinese retail investors with official access to the products. As he outlines here, the latest on Hong Kong spot Bitcoin ETFs, they have been approved to exist, but not launch yet. Rumor has it launching next week. So to not compete with Dubai's conference, don't expect a lot of the flows. We think they'll be lucky to get 500 million, and he outlines why. Number 1, Hong Kong ETF market is tiny, only 50 billion, and Chinese locals cannot buy these, at least officially. Number 2, the 3 issuers that were approved are tiny, no big fish like BlackRock involved yet. Number 3, the underlying ecosystem, there is less liquidity. Efficient equals these ETFs will likely see wide spreads and premium discounts. Number 4, the fees on these are likely to be 1 to 2%, nowhere near the dirt cheap fees in the US Terradome. Takeaway, other countries adding Bitcoin ETFs is no doubt additive, but it is nickel dime compared to the mighty US market. So let me know if you agree or disagree with that sentiment. And additionally, Balchunas said the capital environment for these funds were far less efficient than elsewhere, and fees would likely be set around the 1 to 2% mark, as outlined right there. So it is what it is. Takeaway, other countries adding Bitcoin ETFs is no doubt, as I just said. So the chief crypto analyst, Real Vision, former crypto analyst at Bloomberg, Jamie Kaut, said that despite recent reservations at the size of the Hong Kong ETF market, the products would open up a massive pool of capital for Chinese investors. Now, notably, the Hong Kong FSC approved the spot Bitcoin and Ether ETFs, and that's the first spot Ether ETF to ever get the approval, just FYI. And something different, they're going to be launched using an in-kind model, meaning new ETF shares can be issued directly using Bitcoin and Ethereum. That's right. So if you're a Bitcoin or an Ethereum holder, you can get exposure directly. The in-kind creation model stands in contrast to the cash create redemption model, which allows issuers to create new ETF shares only with cash. US spot Bitcoin ETFs currently use the cash create model, with the SEC fearing that cash create could lead to money laundering and fraud-related issues. The spot ETFs are slated for launch in roughly 2 weeks' time. So that could potentially mean by the first day of the new month in May, we may see the final launch of the ETFs out of here in Hong Kong. So let me know your thoughts on that, family, and what feedback you have from what Balchuna has had to share. Now let's dive into our featured story of the day. The headline reads, Iraq to start Bitcoin mining on nation state level, according to this pundit. So let's break this baby down because this is big news. Here you go. Amidst a notable diplomatic agreement between the US and Iraq, recent statements by Iraq's Deputy Prime Minister Muhammad Ali Tamim have stirred speculation in the Bitcoin community regarding Iraq's potential entry into Bitcoin mining at a nation-state level. Let's go. That's right. During the press conference with U.S. Secretary of State Antony Blinken, Deputy Prime Minister Tamim discussed a range of initiatives aimed at modernizing Iraq's energy sector and diversifying its economy. And amongst the topics addressed was the utilization of new technologies to capture the flare gas, a byproduct of oil extraction that is often burned off and wasted. Flared gas capturing is a significant point of interest for the Bitcoin community, as this excess gas can be converted to electricity and used to power mining operations. This process only provides an economically viable solution to a waste problem, but also aligns with global efforts to reduce environmental pollution, an issue highlighted by Tamim in his speech. Quoting him here, the government of Iraq is working for the prosperity of the Iraqi people, at the same time to pay their debts of the Iraqi nation. Now, especially when it comes to the different phases of the energy sector and the use of new technologies and modernization of the energy sector to reduce pollution, the government is widening its partnership and conducting agreements so to be able to, for example, use technologies to capture flare gas, he said, emphasizing the shift towards innovative and sustainable energy solutions. This development has prompted Joe Kerr, a noted Bitcoin pundit known as X, to suggest that Iraq might be, known on X as Boomstick44, to suggest that Iraq might be moving towards adopting Bitcoin mining on a large scale. Quoting him here on crypto Twitter, or Crypto X. Tell me your country is going to start mining Bitcoin for the US without telling me. Iraq's Deputy Prime Minister, as quoting him here on X, I think I have it pulled up right here. The government of Iraq is working for the prosperity of the Iraqi people, at the same time to pay their debts for the Iraqi nation, especially when it comes to the different phases of the energy sector, and to use new technologies and modernization of the energy sector to reduce pollution. The government is widening its partnership and conducting agreements so it will be able to, for example, use technologies to capture the flare gas. So very interesting. And continuing on with the story, and in addition to the potential environmental and economic benefits, the Prime Minister also touted on enhancing their tourism, following the playbook of none other than El Salvador, shout out Bukele, which has integrated Bitcoin into its economy, being the first nation to adopt Bitcoin as a legal tender and enhancing its appeal to a global audience interested in the King crypto. El Salvador's adoption of Bitcoin as legal tender has indeed sparked interest in the tourism sector, suggesting a potential path for Iraq to link technological innovation with economic diversification. And while official confirmation from the Iraqi government regarding the start of the Bitcoin mining operations is pending and pure speculation at this time, the connections drawn by Kerr between the Deputy Prime Minister Tamim's comments are noteworthy and underscore a growing trend of nations leveraging Bitcoin to address economic and environmental challenges. As reported, already 6 countries officially mine Bitcoin on a nation-state level. These include the obvious, El Salvador, we have the Kingdom of Bhutan, Russia. Remember, more recently, they're even creating a Bitcoin mining hub, which was announced in the news in Ethiopia. We also have the United Arab Emirates, which is the UAE. Can you say Abu Dhabi? We have Oman as well as Ethiopia, as I just pointed out. So, for example, Bhutan had been secretly spending millions building a national Bitcoin mining operation to avert an economic crisis. In my opinion, all the smart money right now is getting exposure to Bitcoin, whether directly or indirectly. What nation will or is speculation right now? Mr. 100, according to Max, his sources are leaning towards Abu Dhabi. Some are saying Qatar. Could be another country in the Middle East. Could be another country not even on our radar. When you start to calculate all this adoption from the nation state level, things get very exciting because we have a very limited amount of Bitcoin. We have a halving in 1 week. 1.8 million Bitcoin left on the exchanges, according to the top analysts. We can have a legitimate supply shock within 9 months. That's just based on the existing ETF demand. We start to calculate all the undisclosed nation state adoption and everything going on behind closed doors and the retail, yada, yada, yada. This can happen within the next couple of months, as Jennifer, as pointed out. Anything is possible. So let me know your thoughts. Where do you feel Bitcoin is likely to take us here this year? Which country or nation state do you think Mr. 100 is that continues stacking them sats? They already have close to 60,000 Bitcoins, and I don't think they're slowing down anytime soon. Holla at your boy and drop a comment. I appreciate it. I'm going to read some of the comments out loud. $1 Million Bitcoin party in El Salvador. Let's go, McFootinator. Hey, let's go. The U.S. government wants Iraq to mine it so they don't have to dirty their hands with the dirty crypto. The U.S. government is a piece of ish. Whoa, deep, Jennifer. The government. I love that. That's right, the government. The U.S. government. It is what it is. And we also know the U.S. government does have a lot of exposure to Bitcoin because they have a piece of all the biggest stocks in the S&P 500, the Bitcoin mining stocks, as well as MicroStrategy, right? So BlackRock has exposure, for example, 11 trillion asset manager. They have exposure to everything. So the United States not only has hundreds of thousands of confiscated Bitcoin, which I believe they took from the hackers, from exchanges, etc., through confiscation. They also have all of this exposure. For example, as I pointed out, and I think it was yesterday's pod, what's the big asset management firm? Vanguard. Vanguard is the primary shareholder of MicroStrategy, and BlackRock is the secondary largest shareholder of MicroStrategy. So they literally have their hands in everything. The U.S. government's not stupid, right? And again, BlackRock alone currently has over 270,000 Bitcoin. What's shocking is they achieved it in 90 days. 3 months since the ETFs have gone live, January 11th. And I don't think they're going to slow down anytime soon. I don't think MicroStrategy is going to slow down anytime soon. You know what I mean? I think it's going to get crazy. Let me know your thoughts. 100,000 to 125,000 by the end of the year, says BS. That's what's up. Up and to the right, y'all. JB, you taught me so much in the last few years. I'm a long-term hodler. I listen to you daily. Thanks for your hard work. Thank you, Anna. Banna, respect. I appreciate it. Thank you. Can you please talk about this some more? Says, I'm not sure what you mean. The DOJ also has the keys to the Silk Road wallets and other confiscated wallets totaling over 8 billion. Good Lord, Greg. So yeah, that's a pretty large holder of Bitcoin, wouldn't you say? Which price roundabout you expect after the halving? As a cycle peak, I can see Bitcoin on a bear scenario hitting 222,000, in a bull scenario, 750, likely somewhere in between. Time will tell. Not investment advice. This show is only for entertainment purposes only. I do this show to entertain myself while educating people with the latest news. Just FYI. Can we get an FJB? Just paid my taxes. Hashtag FJB, please. Thank you, Don George. Love it. She is pamping. There you go. Bitcoin pamping. 62,500. Let's go. Keep up the good work, JV. You're a good dude. Respect, Sammy G. Shout out to all the top G's. Much appreciated, family. Thank you for tuning in, and thank you for supporting the show. Love and light, and cheers.
Call me 3AC cause I'm blowing it up. Short squeeze, more please, yeah, it's going to pump. They drop bud, but it's still not slowing it up.